Hello everyone, I am Pratap here. We are at lesson 6 of supply and demand zone price action theory. And this lesson is having dependency on the earlier lessons. So if you are attending this lesson first time, please go to NeoStock YouTube website and here you click on this home page and then scroll down. You can find a playlist Supply Demand Zone Price Action course. Here you can find all the earlier lessons. And please complete the earlier lessons and then get into lesson 6. In this lesson, we will learn about gap theory, strength of a zone, and base candle count. So let us look into the first concept, gap theory. So what is a gap? Let us understand the meaning of gap as per conventional technical analysis. That is our olden days technical analysis concepts. Please look into these two candles. Let us say this is the most recent candle and this candle is the previous candle to this recent candle. When you compare the previous candle and the recent candle, did you observe a gap between these two candles? The present candle, that means the recent candle, is opened with a gap. So that means our recent candle's low, this is the low, should be greater than the previous candle's high. So this is the previous candle's high. So this is recent candle's low and this is previous candle's high. Between, can we find a gap? Yes. And what kind of gap it is? It is called gap up. That means the prices are opened with a gap towards the up direction. The prices are opened with a gap towards the up direction. And during the entire recent candle, we maintain the gap. So that's why this gap area is called gap up. Similarly, we can find one more scenario. Please look into this example. And this is the previous candle and this is the recent candle. Now compare both these candles. How to compare? The recent candle's high, this is the recent candle's high, should be less than previous candle's low. This is the previous candle's low. So our recent candle's high is less than the previous candle's low. So this is the high of the recent candle and this is the low of the previous candle. And between them we can find a gap. And this gap is called gap down. That means the prices are moved with a gap down. Which prices? Recent candles prices. So what you may ask a question, what is the advantage of finding these gaps? What a gap indicates? It is a very important question. Gap up indicates a bullish direction. Gap down indicates a bearish direction. So bullish direction means up direction. Bearish direction is down direction. Generally when prices move with a gap up, it indicates a bullish market and there is a belief. I am saying it is a belief. So what is the belief? The prices will further go up. And in this case, second example, it is a bearish gap. So that's why there is a belief the prices will go down. Is this belief true? Maybe sometimes it is true, sometimes it is not. For that, there are other theories developed in gap, and you need to understand all those theories. But for our demand supply zone price action point of view, we don't require the conventional technical analysis concepts. But why we are learning? Because we need to understand what is a gap up and what is a gap down. So is this concept, whatever we learned between the high of the previous candle and the low of the present candle, does it hold good? No. Slightly these concepts are changed in the modern gap theory. So that is what we are going to understand. Now let us focus on modern gap theory as per supply demand zone price action point of view. Observe both these candles. This is the previous candle and this is the recent candle. Is there any gap between these two candles? Look into the high of the previous candle and the low of the present candle. We couldn't see any gap, right? But can we say it is a gap up? As per the old theory, you cannot say it is a gap up, but as per the modern theory, we can say the gap up. How it is possible? In modern theory, gap is calculated between previous candles close and the present candles open. Between previous candles close and present candles open. So recent candles open should be greater than the previous candles close. What is recent candles open? This is the open. That is the low of the candle body because this is a bullish candle. This is the open. And what is previous candles close? This is the candle body high. High means not wick high. I am saying body high. This is the candle body high. This is the close of previous candle. And this is the open of the previous candle. Is there a gap between them? Yes. So this is called gap up. In the similar way, for bearish candles, don't compare the wicks. Olden theory, we compared the wicks. But in modern theory, we compare only previous candles close and today's candle. Today's means recent candle. Recent candles open. Is there a gap? Yes, there is a gap. What kind of gap it is? Is it upside gap or downside gap? Downside. So it is gap down. This is upside gap in this example. So it is gap up. This is downside gap. So this is gap down. What we defined in the downside gap, recent candles open. Recent candles open. This is the recent candles open. Should be less than previous candles close. This is the previous candles close. Is it less than? Yes. That's why it is a gap down. Compare both these definitions. The first definition, open should be greater than the close. But here, open should be less than the close. Which open? Recent candles open should be greater than previous candles close. Here, recent candles open should be less than previous candles close. That is what we can observe in this diagram. The recent candles open is greater than previous candles close. That's why it is gap up. And here, recent candles open, this is the recent candles open, is less than previous candles close. That's why it is a gap down. So are we measuring this gap up and gap down in terms of bullish and bearish nature? Not exactly, but in supply and demand zone, these concepts we will understand in a different way. we will understand in demand and supply zone point of view. How to understand these gaps, the gap up and gap down, with the demand and supply zone point of view. That is what you are going to see very soon. First, understand what is gap up and gap down. One very important point in this gap up scenario, please look into the recent candle. If the recent candle's lower wick does not fill this gap, then this is a valid gap. For example, if this lower wick fills this gap, we should not consider this gap is a valid gap. And in this example, because the lower wick does not fill this gap, we can consider this is a valid gap. We can say this is a gap up scenario, a valid gap up scenario. Similarly here, this is a gap down. In gap down, the higher wick of the recent candle does not fill the gap, then this gap is valid. If the higher wick fills the gap, we will not consider the gap. This is an important point we should observe regarding gap up, gap down and filling the gap. Now let us understand the gap theory as per our demand and supply zones point of view. As per demand and supply zones point of view, gaps can be classified into two types. One is called Novice Gap and the second one is Pro Gap, also called as Professional Gap. But we will refer with the short name Pro Gap. The first one is Novice Gap and second one is Pro Gap. Novice means inexperienced people. And professionals means experienced people or experts. Professionals are experts. Novice people are beginners. The gap is generated because of the novice people participation in the market or because of the professional people participation. That way we are thinking. So let us look into the example, you get clarity. First let us look into Novice Gap. And look into this chart. Now prices are nearing to the demand zone. So where we buy the stocks? Inside the demand zone. Because the demand zone is having institutional pending orders. So as per our risk management, we will be defining your trades inside the demand zone. Because institutional demand zone is having institutional pending buy orders. These pending buy orders will push the price up. Now I will ask you, near to the demand zone, do you prefer to buy the stock or do you prefer to sell the stock? Obviously, we prefer to buy the stock. The reason is demand zone area is the buyer's area. But what novice people will do? They don't know. Demand zone is the buyer's area and supply zone is the seller's area. They might have brought the shares in the seller's area. Now the price is moving down. Because the price is moving down, with a fear, they want to sell the stocks by thinking the prices will further go down. Where they are trying to sell? In the buyer's area they are selling. Buyer's area we need to buy. We should not sell. Because novice people participated. What about the supply? The supply is high because they are selling. But are we buying? No, we are not buying. We are waiting prices to come inside this demand zone or into the demand zone. That means there is no buyer's participation. The majority of the participation is from the sellers. These sellers are novice people. They did not realize They have to buy in this area. So they are selling. Because of their selling pressure, the prices come down with a gap. So the prices went into the demand zone. Now the institutional pending orders are getting executed and then they are pushing the price up. But by the time the prices came down with a gap, and that means the participation in the market is mainly because of the novice people. That means this gap is generated because of the participation of the novice people or novice traders. So that's why this gap is called as novice gap. Okay, we land a gap indicates either bullish nature or bearish nature depending on gap up or gap down. This is a gap down scenario. So as we learned earlier, this gap should indicate a bearish nature. That means it should push the prices down. But that is not happening because this gap is not due to the professionals' participation. This gap is due to the novice traders' participation. And novice traders' participation does not holds for a long time. It will be closed immediately after one or two candles. Now, what's happening? Here we have institutional pending orders which are pushing the prices, and then the prices went up and this gap is closed. That means the gap is filled. Gap is closed means gap is filled. So within this second candle itself, this is the candle with a gap, a novice gap is created. After that, the first candle, second candle itself closed the gap. After that, markets are moving up. Why moving up? Because of the pending orders in this zone pushed the market up. That means all the novice people, they got losses. Why they got losses? Because they don't know where to buy and where to sell. So that's why every gap is not a bullish gap or bearish gap. If professional gaps only the bullish or bearish gaps. That too the location where they created. But novice gaps never be bullish gaps or bearish gaps. They will be easily filled. So this is one observation you have to make. It is an important observation. First, if you want to understand the nature of the gap is bullish or bearish, first you should understand whether it is a novice gap or it is a professional gap. That you will be able to understand with the help of the demand and supply zones. Without demand and supply zones, you cannot classify the gap as a novice gap or professional gap. If the gaps are into the demand zone, they are called as a novice gap. Similarly, if the gaps are into the supply zone, that is also called as the novice gap. In this example, I have shown the gap into the demand zone. Exactly the same way, if the gap is into the supply zone, that is also called as a novice gap. Then what is a professional gap? Let us look into the example. The price is at the demand zone and demand zone is having institutional pending buy orders. These pending orders are pushing the price up. There are times institutions will place new orders apart from having their existing pending orders. That means the existing pending buy orders and the new buy orders from the institutions together further push the price up with a gap. That is what happened here. And such kind of gaps are called professional gaps because this gap is created by the institutions. This gap is created by the institutions by placing new orders. The existing pending orders and new orders together pushed the price up. That's why we are calling such kind of gaps as professional gaps. But how do we know these gaps are created by the professionals? Because we already know demand is the area, buying area. And who will be buying? Professionals who are having idea about these demand zones or supply zones. At present, we are discussing about the demand zone. So let us focus on the demand zone. Because professionals are adding the orders and this price is moving up due to the new orders placed by the institutions. That is the reason why we are calling this gap as a professional gap. Now, how this professional gap is holding, please observe how this professional gap is holding the prices. The prices are not able to go below this professional gap. But previously we have seen novice gap is easily filled. But it is not easy to fill professional gap. Whenever prices are entering into this professional gap, let me extend these lines. Whenever prices are entering into this professional gap, the pending buy orders in this professional gap is pushing the prices up. That means it is not easy to break this professional gap. So how to trade with the professional gap? One option is, if your risk management permits, you can place buy orders next time when prices are entering into this professional gap. But remember, your risk management should permit. Otherwise, you cannot take the trade. If your risk management permits, you will be placing your order here when prices are just entering into the professional gap. You will place your order. But what is your stop loss? It is going to be the distal line of this demand zone. Suppose if our risk management does not permit, then don't take the trade. Because we take trades only when our risk management permits. Otherwise, we look into some other stocks. Okay, and another approach with the professional gaps, how to deal. Suppose when prices entered into this zone, we have a supply zone here. We have a beautiful rally candle, and then base candle, and then drop candle, which created a supply zone here. So next time when prices entered into the supply zone, look into this candle. So in supply zone, what kind of trades we should take? Short trades. Last lesson we have discussed what is a short trade. First we sell and then after prices reaches into the demand zone, we buy. That way we get the profit. So at that time we land the demand zone high. The demand zone high is the target. But when there are professional gaps are not allowing the prices to reach into the gap. If you don't sell, what will happen? If you don't exit from the short trade, what will happen? Here you took a short trade. If you don't exit, thinking that prices are entering into this demand zone, see how prices again moving back? That means our profit margin is reduced. If further price go up, you don't get profit. Even if further go up, you get losses. That's why you should be very careful when there is a professional gap. When prices are entering into this professional gap, just before entering, you should exit your short trade. Earlier, you took a short trade in this candle. Now, prices are reaching into this professional gap. After that, in this candle, the prices came down, down, down. When they are about to reach this professional gap, you exit from your trade. That means you have to book your profit. Earlier, where we booked our profit at the demand zone high, when prices are entering into this demand zone high, we exited from our trade because that is the target. But when there is a professional gap, you should be very careful for managing your trades. So you have to exit your trade when prices are just about to enter into this professional gap. So this is one important point we should observe. Let me show you one more example about the supply zones, a live example. So this is our recent chart, Nifty 50. It's an index chart, Nifty 50. Look into this supply zone. There is a drop candle, and then we have a base candle, and again we have a drop candle with a professional gap. See how this professional gap is holding the prices. Prices are unable to go beyond this professional gap. It pushed the price down. Next time again when price reached just it is about to enter into this professional gap area, and then professional gap pushed the prices down, and then it went up to the next demand zone. So this is what we should understand, how powerful these professional gaps. That's why only professional gaps we call as either bullish or bearish. If the professional gap is near the demand zone, we call it as a bullish gap. If the professional gap is at the supply zone, we call it as a bearish gap. So always remember these rules. One rule is your risk management allows. Assume my risk management is allowed at this area, from this gap area till the distal line of the supply zone. I could have taken a short trade. See how much profit I would have got from this supply zone with the professional gap till the next demand zone. I would have got a very good profit. Assume if I would have brought my share somewhere here. Okay, we didn't have exact demand zone, but time being assume. So what is my target? It's supposed to be the supply zone. When supply zone is about to reach, I should sell my stocks. But because there is a professional gap, we would have sold our stocks at this area. If not here, at least at this area, we would have sold our stocks to get the profit. That means when there is a professional gap, your target is not the zone low of the supply zone. Your target should be the professional gap area. When prices are just about to enter into the professional gap, you need to book your profit. These are the two important points you should understand about professional gap. So let me summarize the points we have learned. The two important points. First one, professional gap at demand zone would be having institutional pending buy orders. That's why next time when prices reaches into that professional gap, the institutional pending buy orders again will push the price up. Similarly, professional gap at supply zone would be having institutional pending sell orders. Next time again when prices reaches into this professional gap area, the institutional pending orders again will push the price down. So far you learned demand zone is the area where we are having institutional pending orders. Our supply zone is the area where you are having institutional pending sell orders. Now you are also learning, apart from demand zone and supply zone, even the professional gap area is also having institutional pending buy orders or sell orders, depending on the location of the professional gap area. This is about the gap theory. I hope the information in this video is useful to you. In part 2 of lesson 6, let us focus on zone strength and base candle count. So if you have any questions regarding the topic in this video, please put them in the comment section. I will try to answer your queries. So let us all meet again in our next video. Thank you.